Hello and welcome. I'm Elvis Johnson of Johnson Wealth Advisors, and this is your October 2025 market update. It has been a year of, well, really remarkable strength and resilience for the markets. But what's actually driving the numbers we're seeing? Let's break it down, looking at performance as of October 31st.
So let's start with the big picture, the broad market. The S&P 500 is up an impressive 16.30% year to date. That right there is a really clear signal of the positive, constructive environment we've seen for U.S. stocks pretty much all year.
But the story gets even more interesting when we look at the tech-heavy NASDAQ composite. It has climbed an incredible 22.86%. This really highlights the dominance of one particular part of the market, which we're going to dig into right now.
Now, what's so fascinating here is just how broad this rally has been. As you can see, nearly every single major U.S. sector is in positive territory for the year. The one and only exception, consumer defensives. The sector for everyday household staples. This tells us a story. Investors have really been favoring growth and cyclical companies over those more cautious, stable ones.
So that brings us to the big question, right? What exactly has been the engine behind this really powerful market rally? Let's take a closer look at the key drivers.
It really boils down to three primary forces. First, no surprise here, the continued leadership from the technology sector, which is just being supercharged by the whole AI boom. Second, corporate earnings have been incredibly resilient. And third, financial conditions have generally been supportive for growth assets.
Let's just double-click on that first point about tech leadership for a second. Its impact is, well, it's hard to overstate. Just think about this statistic. In the third quarter alone, tech companies drove nearly 60% of the S&P 500's total earnings growth. That's the AI effect translating directly into real profit. It's huge.
And this isn't just a tech story. Across the board, strong corporate earnings have really provided the fundamental bedrock for this rally. In fact, companies have now beaten expectations for an incredible 9 quarters in a row. That shows a resilience that just continues to fuel investor confidence. Okay, so we've got a market fueled by strong tech and really resilient earnings. But a complete picture, well, that requires us to look at the other side of the coin. So let's talk about the context here. Market breadth, valuations, and the risks that naturally come along with such a strong run.
And this perfectly illustrates the kind of two-sided nature of today's market. On one hand, having almost every sector in the green is a really healthy sign. That's constructive. But on the other hand, a huge chunk of the gains is still concentrated in just a handful of those mega-cap leaders. And that concentration remains a key risk that we have to be mindful of.
The other crucial point to remember is that this rally has pushed market valuations higher. Now, when valuations get elevated like this, it just means the margin for error gets a whole lot slimmer. Any kind of disappointment in revenue or earnings could lead to more significant pullbacks.
So with this mix of real strength, but also some underlying risk, the most important question for you is, what does all of this mean for your long-term portfolio strategy?
Let's talk about that. In any market environment, but especially this one, the focus really shouldn't be on short-term reactions, but on timeless, disciplined principles.
These are really the core principles that guide sound investing no matter what the market is doing. First, diversification is absolutely key. Spreading investments across different assets and sectors helps manage risk. Second, it's so important to rebalance. When one part of your portfolio grows much larger than others, trimming it back helps lock in some of those gains. And finally, your strategy has to match you. Your personal goals and your time horizon should always dictate the level of risk you take.
And of course, I do need to mention that all of this information is for educational purposes. Past performance is never a guarantee of future results, and this shouldn't be taken as personalized investment advice.
All right, so to wrap things up, let's look ahead. As we head into November, what are the key events and data points that could really shape the market outlook?
We're keeping a very close eye on 3 key areas. First, the upcoming earnings reports from those mega-cap tech giants. Second, any new commentary or signals from the Federal Reserve about interest rates. And third, the latest data on inflation and the job market. Any one of these has the potential to shift market sentiment.
Staying on top of these developments is what we do. At Johnson Wealth Advisors, we monitor this data daily to help ensure our clients' strategies remain aligned with their long-term goals.
So I'll just leave you with this one thought. Given this year's very strong run, have you had a chance to review your financial plan to make sure you're positioned for whatever comes next? I'm Elvis Johnson with Johnson Wealth Advisors. Thank you so much for your time.